So if you just glanced at the US market numbers this morning, you probably did a double take. We saw a major sell-off on Wall Street overnight, and the big question for all of us is, what in the world does that mean for the Korean market today? Okay, let's get right into it and break down exactly what's going on. And when we say a sea of red, we really mean it. After a little bit of optimism, the markets just hit the brakes hard. It was a really broad decline, and honestly, there were very few places for investors to hide. And this chart really paints the picture, doesn't it? Just look at those numbers. The Dow down 1.69%. The S&P 500 not far behind at minus 1.64. And the tech-heavy Nasdaq? Ouch. That one got hit the hardest, plunging 2.28%. This wasn't just a little dip, folks. This was a pretty big deal. So you gotta ask, why the sudden reversal? What happened? Well, it seems like once the big news about the US government shutdown was finally over, the market's attention just snapped right back to some of those older, nagging worries. Let's unpack the three main reasons this happened. First up, the good news wasn't exactly new news. The 43-day government shutdown finally came to an end, which is great, but Wall Street had kind of already expected that. It was already baked into the price, leading to a classic market reaction you might have heard of. Yeah, it's that old saying, buy the rumor, sell the news. Basically, traders get excited about something they think is going to happen, so prices go up. But then, once it's officially announced, the excitement's gone. They sell to lock in their profits, and the price drops. That's pretty much exactly what we saw play out here. So, with the shutdown drama in the rearview mirror, the market's focus immediately shifted back to a couple of old ghosts. First, we got a fresh wave of hawkish comments from Federal Reserve officials. That's the, we might not cut rates kind of talk. And second, those concerns about an AI bubble and crazy high valuations in tech came roaring right back to the forefront. And you want to see the impact of those Fed comments? Look at this. The chance of a December rate hold, meaning no cut, shot up to 48%. That is a huge swing in expectations, and it shows just how nervous those comments made the market. So where did things get hit the worst? Well, with the Nasdaq dropping like a rock and all this talk of an AI bubble, it's no surprise that the tech sector was right in the middle of the storm. I mean, just look at this list. It's a who's who of big tech. NVIDIA, down over 3.5%. Intel, down more than 5%. And Tesla, a massive hit, down almost 7%. The whole Philadelphia Semiconductor Index fell nearly 4%, which just tells you how widespread this tech sell-off really was. But here's the interesting part. Amidst all that bleeding red, there was one little island of green. The energy sector was the only one that actually finished the day up. So this tells us it wasn't a sell-everything kind of panic, but a much more targeted retreat from tech. Okay, so that's the rearview mirror. What about the road ahead? Let's talk about what's coming up today, because there are a few key events that could either call things down or, add a little more fuel to the fire. So you'll want to keep an eye on the clock for these. And remember, these are in Korean Standard Time. At 10:30 p.m., we get the US Producer Price Index, a really important inflation number. Then we've got a couple of Fed speakers on deck. Their tone on inflation and interest rates is going to be watched very, very closely. And now for the main event. What does all of this actually mean for us here in Korea? How is the market likely to react to all this overnight chaos? Well, it's looking like a mix of some serious headwinds and maybe a few hidden opportunities. This slide really lays out the tug-of-war we're looking at. On the negative side, you've got the direct hit from the US tech drop, those fading hopes for a rate cut, plus a really high won to dollar exchange rate up in the 1,470s, which is a big burden. But on the other side, there are still some positive expectations around policy for sectors like bio and nuclear, and we could see money start to rotate into some of these overlooked areas. So where might that money go? Well, instead of the whole market going up, we could see this rotational trading. Think of it like investors deciding the party in one room, say tech, is getting a little too wild, so they start looking for other, less crowded rooms to hang out in. Areas like bio, batteries, and even shipbuilding are what analysts are pointing to right now. All right, we've covered a lot of ground, so let's boil it all down. If you're going to remember just one thing from all of this for today's trading session, this is it. The bottom line is this. We're probably looking at a weak start. The headwinds from US tech and that strong dollar are just too much to ignore. So the key thing to watch today probably won't be the overall market, but where money is moving within it. It's really a day to look at specific sectors, not the index as a whole. And that leaves us with one final thought to chew on. With big news events like the shutdown now behind us, the market doesn't have those big catalysts to trade on anymore. It's forced to look at the fundamentals again. So the question for you is, what fundamentals, company earnings, economic data, sector trends, are you going to focus on to guide your next decision?